we begin with the big issue, and that is signs of optimism heading into the G20.
A lack of bad news is probably good news.
Kicking the can down the road would be just fine.
Some sort of détente, perhaps, on Monday.
We probably will end up with a standstill agreement.
You don't get a comprehensive agreement, but do you get a reset to restart the discussions?
Further discussions.
A further meeting.
But if things go badly wrong, we could be panicking, I think, on Monday.
Let's say that there's an escalation.
If they storm away from the bargaining table.
What will happen? The Fed will probably cut rates by 50 basis points, not 25 in July.
You don't need tariffs to go away. The Fed is going to be dovish.
So the key question, are easing trade tensions priced into the markets? Joining me now around the table, Mark Lehmann of JMP Securities, Ron Sanchez of Fiduciary Trust, and Jack Caffrey of JPMorgan Chase. And Jack, let me start with you. I mean, we have S&P 500 near record highs. What exactly are the markets pricing in as we head to the G20?
You know, I think realistically, the market is pricing in a continuation of what we've seen, which is effectively an agreement to disagree, but not to disagree so violently that trade talks break down. And so we'll continue talking. We'll probably postpone things for another few months, which will give us more reasons for angst later in the summer as we come up against what will be another deadline.
Ron, what's your take?
I'd agree with that. I think what we're experiencing, markets are becoming a little more optimistic that we have not only a ceasefire, but maybe some clarity with respect to trade and the implications for the economy. I think what markets are hoping for is the same type of clarity we got from monetary policy last week. I think we'd like to see a little clarity with respect to trade policy, which is obviously very complicated, will play out over the balance of the second half of the year, but some guidance, some encouragement that we will not have additional tariffs on the $350 billion, that we will restart talks, and some optimism around a resolution.
Mark, markets are pricing in sort of a stalemate. If we don't get that, if we get more risk, how do you measure that downside volatility, the left tail risk?
Well, you don't get an agreement, you get a lower market here because people do not, globally, tariffs hurt and they hurt everybody. And I think the market right now, as our guests have aptly described, is one that looks like we'll see some continued unease, but eventually we're going to figure it out. And if we continue to go down that path, we'll be fine. If we don't, I think there is more downside for the market, especially at near-term highs. That's an easy, I think, an easy call.